kimono. We have to know this song, right? No. Alright.
Order filled.
Order filled.
Good.
Alright, so now I'm gonna break down this trade in 3 simple steps. So first, we're gonna go over the higher time frame analysis. So how and what did I see to be almost certain that I won't waste any time on this trading day in front of the screen waiting for an entry. Second, we'll go over the entry, so how and when did I enter the trade. And the third step, it's just the trade management, take profit, stop loss. Actually, I'm gonna add let's call it a little bonus. I'm gonna introduce a subject that for me it was one of the major piece of the puzzle that was missing until I became profitable. So I'm gonna introduce lightly the subject, but I'm gonna make a complete video about it. So let's get started. So first off, let's go on the weekly chart. So I executed this trade on the Friday of that week. So it was the last trading day. So what we did during this week, we took the all-time high that was made around 3 weeks ago. The only thing that we need here, there's no fair value gap beside this one, but it's pretty far. It doesn't matter for now. The only thing that we need to keep in mind is that we just took the all-time high. Now on the daily, we took the all-time high, like I said, on Thursday of that week, and we left a bullish fair value gap behind us. So on Thursday, we tap into that bullish daily fair value gap, and we can see that the market is respecting that fair value gap by the wick. But now on that Friday, what we have, we actually continue higher. Right now it's hard to see because it's just one candle with wicks, but we'll see it in the lower time frame as we continue diving in the time frame. But what we have on that Friday is we take out the previous all-time high that was made on Wednesday. So we tap into the bullish daily fair value gap, and then we start going up. We take the all-time high, and so it's normal that we see a reaction from that PD array. So now on the 4-hour, what do we have? On that 4-hour, we can see the same thing as on the daily. Previous all-time high, we take it out, so it's normal that we see a reaction. It's a strong PD array. So what we have, we leave behind us a 4-hour fair value gap, a breakaway gap more precisely, because the third candle closed above the previous candle high. So this gap usually means that the market is strong and we want to continue higher without having to go back inside that gap. And then what we have, come back into it. So that's the first sign that it's weird, because we are not supposed to, like I said, ideally we don't want to trade back into that breakaway gap, and also we don't want to disrespect it, just like we can see here. And then what happened on market open, it's like around 10, we can see the 4-hour close and we create a bearish fair value gap. We tap into it and then big rejection. So at that moment the probability was higher that we go for these two low. So at that moment I knew I had to look for shorts. I just removed the previous candle because when I was looking for the trade, I was looking at the chart and I saw that. So I knew when this candle would close, it would be a bearish fair value gap. So at that point I was looking for it to tap into that 4-hour bearish fair value gap and then go down on the 15 for some more bearish fair value gap, and on the 1 minute for the entry. Alright, so right now on the 1 hour, what we have, we have the third candle in creation. So we are anticipating another bearish fair value gap. So on the 15 minutes, we got our bearish order flow and this fair value area. So the best scenario is that we just come back around here and start dropping, and I find my entry over there. But it didn't happen. Let's see. Here, so what happened here, we create that bearish fair value gap and not a bearish breakaway gap. So I knew that this type of gap will get traded back into it. That's what happened, and I had the chance at this moment to go on the 1 minute and find the entry. I didn't wait for this because this was enough for me, as we were so close to getting this low. Because as we get closer to the low that we are targeting, the market just deliver much more faster. If you take some time and analyze this, you can see when you're targeting some PD array, the closer you get to the high or the low, when you're very near, the market delivers super fast. It doesn't wait for you to get involved, it just delivers. So when I saw the 15-minute bearish fair value gap being created, I dropped down to the 1 minute, and that's where we get into the second step, which is the entry. Alright, so now for the entry, I made the box. This is a 15-minute fair value gap. I made a box green just so you distinguish, because this is the 4-hour and 1-hour fair value gap, but I don't want to remove them as they still exist. So when we tap into that 15-minute fair value gap, what happens? Boom, we directly start going down, and look, and we can see we create this bearish breakaway gap, and we just keep delivering. But we can see that we don't create any more new bearish fair value gap, so that means that there's no bearish order flow. It means that it's not strong. There's no order flow, like I said. So I don't want to get involved. I want to see multiple fair value gap before I take my entry. So what happens, like I said, no more bearish fair value gaps. We start going up, we create a bullish one, and we don't tap into it yet, and we get back into this. So as this is still a fair value gap, breakaway gap, we get a reaction, and we go back into that bullish one. Now, if the market wanted to reverse and start going back up, we would have seen a reaction, and we would have started going back up, but it didn't. It disrespected that 1-minute fair value gap, but it didn't create bearish fair value gap. So do you start to get it? Look, it's still the same thing. We don't create some new bearish fair value gap as we disrespected, so it's not clear as of right now. Now what happened? Oh, we have a breakaway gap, and as we create this breakaway gap, we create this fair value gap. So at that moment, I just entered targeting 142 RR, and now I'm gonna introduce the subject that I wanted to talk about, that it's crucial. So first, let's see how the trade unfold. We tap into the fair value gap, and we deliver towards the take profit. So now, before we get into that subject, for the third step, it was trade management, stop loss, and take profit. So these three things that I need to manage are being coupled with the last step that I want to talk about, the crucial thing that I need you to understand. Because look at this, what we just went over: creating bearish fair value gap, creating bullish fair value gap, and not creating new one after creating one means that there's no order flow. It means that it's not strong, it's not the real direction. So what happened here is the same thing. We create this breakaway gap, we create this bearish fair value gap, but now I'm getting to that trade and we don't create new one. So I knew that there was something off, that we would probably not go there, and the market was about to reverse. So at that moment, what comes into play? Chart time, watch time, whatever you call it. And this is why, this is the moment I introduce the subject. Backtesting is not good. And what I mean by this, it's backtesting with tools that I won't say the name. You guys, if you do backtest, you probably know what tool I'm talking about, or even doing replay on TradingView and getting involved in short or long trade, because this is not real. You can skip weeks, you can skip days, you can skip months of trading days in a couple minutes. So this is not real. The win rate you get on these, it doesn't reflect the reality. So that's why if you want to backtest, you need to deposit money on a live account or buy a challenge and actually trade your strategy and journal everything. You journal all your trade, and then that's how you backtest. At the end of each trading day, each week, each month, you review all your trade, and you're gonna make, your brain is wired to find out pattern, and you're gonna see what works, what doesn't work, and you just remove everything that doesn't work, and you're gonna increase instantly your win rate and your success of making money in these markets. That's how you backtest, because it's real. You're sitting there, you're gonna spend 1-2 hours in front of the chart with your emotion, your real money. You can cut corners, it's true. So where am I going with that? It's that by the clip, if you notice at the start of the video, in the clip that I'm singing the alphabet in Japanese, I cut the trade before my take profit, because I knew, because of the amount of screen time that I have and the real backtesting of my strategy, I knew that this was about to reverse. So what happened next? I would have been stopped out, and I was near my take profit. We could argue that I didn't follow my trading plan, but my trading plan involves that I lower my stop loss when creating new fair value gap, so I get a break even or even close the position in profit. And what happened? There were no new bearish fair value gap, so I knew that it was sketchy and we were about to go up. So yeah, that's the end of the videos. But if you want more detail, just subscribe, turn the bell on. My next video is gonna be only about this. So I hope you got some value out of this video. And I'm live streaming all these trades on Twitch every single trading day. So right now the community is nearly non-existent. So if you want insight, come on my stream, come join the Discord, or DM me on Instagram. I'll even send you a vocal message to reply to your question. That's it for me. Thank you. Bye bye.